I had one company that was really bad. The company was CarMax. It was a car rental company. It was going up and I shorted that. It just keeps going up, keep going up. And eventually I had to accept a $200,000 loss.
In span of how many hours or days you had to accept?
It was 2 hours.
2 hours.
My problem is with Bitcoin. There is no fundamentals behind it. Bitcoin can go to zero. Dogecoin can go to zero because there is no balance sheet behind it.
Who are you?
I'm Andrew Aziz. I'm a trader, author, and investor. And I've been trading in the US stock market for almost 10 years now. Thanks for having me.
So, what does a trader mean?
Trader means someone who trades, who buys and sells financial assets, like companies, and hopefully they can benefit from going up or going down of the prices.
I checked your net worth before we started this, and it says, I don't know if it's accurate, 3 to 5 million, 3 to 6 million around. This is what I found.
Maybe.
And maybe this is how you made your money through your life, or not?
Yes.
Not. Explain me how.
I explain you how I made money trading. So I do day trading stock market. So we try to benefit from the volatility at the market open. So when the prices are going to go up, we try to buy, and there's something called scalping, and then we do the scalping with that.
What scalping means?
Scalping means so you start making money from the very short price fluctuation of the stock. Like, for example, Tesla trades at 200 and then pops up to $205. You try to benefit from that $500 only in very short period of time.
And you long the stock, you short the stock, like how,
Both.
if you can, because I'm not very familiar, I'm sure the audience is not very familiar. If you can explain exactly, like, how does that work? Like,
yeah, so, when the market opens, everything starts going up and down. And so what you want, you buy it if you think the price is going to go up. So in Tesla, $200 pops up, you buy it, $210, you sell it for a very short period of time. You don't hold it for a day, you don't hold it for a week, you don't hold it for weeks. So very short period of time. And if you think price is going to go down, you short that. So you borrow the shares, you short it, and when the price comes down, you actually cover it with some profit.
Well, I am here a bit to challenge you, but
Yeah.
So you don't think this is pure gambling?
Yeah, it is kind of a speculation. You don't call it gambling, but you call it a speculation. The way that you want to stay away from gambling is that you stick to the rules that you have. In gambling, you go and then you put your money and, you only hope for luck. But trading is not about luck. It's about sticking to the rules and, the strategy that you have. So you follow that strategy. But there is one thing between gambling and trading. Both of them is uncertainty. You don't know what happens. In gambling, the uncertainty is pure luck. But in trading, you control your risk with the stop loss. You get stopped out of it.
So every day you wake up and you say, "Oh, this stock will go up, this stock will go down," and you attack.
Yeah. So every day, every morning, we go and we watch the market, like Tesla, Apple, Nvidia, and then when the market opens at 9:30, we decide based on the rules that we have. We decide which one to trade and which one not to trade. 5 days a week, Monday to Friday.
And so, can you explain me a bit what happened now with the Tesla stock recently?
Tesla is really down, 15% down in the last week. The reason for that is that they do not produce any more cars. They have kind of reached to a growth, like they are not really, getting into the growth. And then the investors don't like that because investors like to growth continuously. So since 2019, they were continuously every 3 months, they were adding more cars. But now they reached to a point that they're not really selling more cars and they kind of plateaued. Dangerous.
And this is exactly what you're trying to do, but no, you are not. You cannot time this. Or they've been doing successfully every 3 months growth, and like this week of the year after 4 or 5 years, then this will come out. So how do you
Investors
understand?
do that. Investors do that, but we don't. Like what we do is we look at the price and the patterns that every day. So we don't care about 2019 numbers and now numbers. We don't care if the Tesla is going to go up or down in 10 years. We look only for that 1 hour or 30 minutes, half an hour in the open. We trade it based on that.
And how how the hell you trade based on that? I don't understand.
Yeah, well, it's like a puzzle. There are chart patterns like a puzzle. How do you solve a puzzle? You look at the puzzle, you see, if it's like, or if like a chess, there are some moves that you see and say, if this move happens, then it's probably going to go up. If this move happens, it's probably going to go down. So it's based on the chart patterns. It's like a puzzle.
Okay, now I understand. So you are saying that sometimes there is an evidence that it will go down based on the chart pattern.
Exactly.
And you make your bet there.
Yes, exactly.
So can you share a bit, like, so when you see it go like 3% down, 5% down, when you see it like do like, I don't know, I saw there is some chart, we're going to put some photos, like when there is, like what's the pattern that you are looking?
The pattern that we are looking is something called a flag, like a flag. If it goes up and then it stays sideways, then we think that it's probably going to go back up again. So it's called it flag. So it goes up and then like a flag stays and then we go up. So that's one of the patterns that we look for.
Flag, like this, and then
exactly, yes.
And then you think this shows that it's up, and when it's like that, this shows that it's
it
down.
Goes down, yeah, exactly. That's one of the very important patterns. You can Google it. Google bull flag.
And you think if you do that over a period of time, you're going to make more money than you're going to lose.
Yes.
Correctly.
Yes.
What's the returns? Like, I know it depends on how much money you are putting. I don't know how much time, how much bets you're making per day. But let's say on a stock market, I don't know, this is, as far as I know, is like 10% a year if you put S&P 500 or something like that, 9% a year. On this stuff, how does these returns work?
So the return here is we target 1% a day. We try to get 1% a day on average. Some days are better, some days are worse.
You strive to do on average. So that means that is so much more better. Like even if you achieve 0.5 or 0.3, so much more yielding results in comparison to the S&P 500 over a year.
Yes. But the difference is you can do it on the small accounts, but when your account is getting big and big and big, then you cannot do the day trading like that. So that's why Warren Buffett doesn't do day trading, because the market doesn't have enough volume and liquidity to do that.
Explain.
So, for example, you can buy 1,000 shares of Tesla for trading, and then 2 minutes later you can sell it, but you can't buy like 50,000 shares or 100,000 shares or 1 million share of Tesla.
Why?
Because market doesn't have enough volume or liquidity. Like, for example, you want to go buy grocery shopping, and if you have too much money, the store doesn't have enough orange or apple to sell to you. So it's good for a small trading, not for big amount of money. That's why day traders can make 1% a day, but hedge funds and billionaires, they can't, because they have just so much money.
There is limited things in the world that they can accept so much money and yield a return.
Exactly, yes.
So I understand that you made, so you make money teaching this stuff?
No, we make money trading. We actually trade the market.
So, but you have a book that is very successful about trading. You have like you have YouTube videos of teaching people how to trade as well.
Yes,
So
yes, we do. Yeah.
you make money teaching people how to do this.
Yes, we have a website that also has the education for people who are interested.
And what's the percentage of that of your total revenue that you are doing?
I can't say that.
You can't say that. Okay, I forgive you.
Confidential.
Good. So, but I saw a TikTok recently from what's his name, Mark Cuban, and he's saying don't listen people on the internet how they tell you that you can't make money. Can you give me a reason why should people listen to you teaching them?
People shouldn't listen only to me. People should read as much as possible and educate as much as possible. But what we do as trading doesn't mean that everyone can do trading. Like you are from Europe. You watch football. You love football. You see all the Cristiano Ronaldo. But can everybody become like Cristiano Ronaldo? No. But that doesn't mean that people shouldn't play soccer, shouldn't play football. No, you can try. Maybe you become as good as Cristiano Ronaldo, maybe not, but you have to do your best. So you can make money online. You're not guaranteed to make online, money, but you should give it a try. But you have to learn, you have to practice, you have to follow the right people, you have to educate yourself.
Okay, that's a fair, very good answer. A young person, do you think there is so many scams in the current age of all these industries?
Yeah, I think there is a lot of false promises, especially in the crypto market, that they say buy this, it goes up, and that kind of thing, and people should be very, very careful of that.
What are some of the markets that you like trade? Do you only stocks?
Only U.S. stock markets. Only U.S. Not Europe, not Asia, not China. Only U.S.
Why?
Because it's so volatile. It's all the biggest companies in the world are there. The volatility that goes ups and downs.
Okay, so more volatility equals more signals, flags that you see.
Exactly.
And equals
Yes.
more return. Did you try it? The other stocks as well, like the market, like the European,
No, I never tried that. Only U.S. market. I'm from Canada, so I learned U.S. and I stay with the U.S. But I read about them and I see that Canada market is not good, Europe is not good. Only U.S. goes up and down a lot.
So now, how much how much money is too much? Because it's like $1 million too much to do this. It's like 100,000 too much. It's like 10
It's
million.
probably more than 1 million. Yeah, it's a good question. 1 million, I think more than 1 million is getting more difficult to get 1% every day. I think day trading is good between like account from $10,000 to $1 million in that range.
Can you walk me a bit? This is so interesting. You are actually surprising me a lot with your answers. So, can you walk me a bit through your day? How do you do this stuff? You are just behind the screens and you are like, oh my god, flag. Let's put $10,000 here.
Yeah, exactly. It's like exactly like a video game. Like you look at it, it's exactly like a video game because you have to press the button right at the right moment really fast. Very similar to a video game. You just have to look at those patterns. Have you played Tetris? Just go change it quickly or all these games. It's very similar to that.
So you wake up and when the stock market opens until it closes, you're trading.
I trade only 2 hours in the morning.
Only why you choose to do that?
Because most of the volatility is in the first 2 hours. After that, it kind of flattens. Plus, I want to go live my life, do other things. I don't want to stay just constantly look at the.
Okay, so you found in the mornings there is more volatility and it's worth for your time. You get you think you get double the return for your time? You think you get like 5 times the return in that time in comparison to later hours?
Yeah, I think I probably get most of my return in the first 2 hours.
If you say that you are active 10 hours, all the hours of the market. I know it varies, but you are going to get, let's say, 60% of the results in the first 2 hours and then 40% of the results.
I probably get 90% of my result in the first 2 hours.
90% of yours. Okay. Really interesting. Okay, so explain me your life. You wake up and
Train
go.
for 2 hours and then go for a run. And then I travel a lot. I go swimming. If in the summer, I go to the beach. And sometimes I'm staying in the office, working a little bit on writing new books, new papers. And yeah, enjoying the life. But I travel a lot.
Travel for what? For work or because you have fun
For
traveling?
both. For climbing and for work. For meeting traders, different places, having conferences, promoting the books.
Very interesting. So all the business is around trading.
Yes.
How many years you're doing this stuff?
10 years.
And how do you got into it?
I had some money. I wanted to do something with it. I was an engineer, and I decided to just, to play around with it and learn it. And I learned it by myself. I learned from YouTube. I learned from reading books. I learned from reading websites.
And in the beginning, you lost a lot of money.
Always, you lose a lot of money at the beginning. Like in one trade, I had $30,000 in one trade. I lost $10,000. But it's always like that. You lose money and then you're slowly going up.
Can you walk me a bit more through the process of longing and shorting?
So longing is like buying. You buy now, you sell higher. Shorting is different. Shorting is you think price is gonna go down. So what you do is you borrow the shares from somebody, you sell it. When the price goes down, you buy it cheaper and return it back to that guy. So you make money from the profit, from that profit.
Can you give me an example with actual money and a stock for me to understand?
Yeah, like for example, Tesla. Like Tesla is going down. You said that. So Tesla is a really troubled company. Is going down. So you wanna make money on the way down. So what you do is you're gonna go to someone who has Tesla, some of the investors of Tesla, and say, hey, do you borrow your Tesla shares to me? I'll pay you interest, like 5% interest to you. And they say, yeah, sure, I want to keep them. So you can borrow them. So you get the shares and then you sell them to the market. And then the price goes down. And then it's cheaper, like $200 you sell it, the price down goes to $150. And then you buy it cheaper. And then you return the shares and then you make them, different money from the difference. Because when you sell it, you keep the money. And then when it goes down, you buy it, but you keep the difference.
But how much you lose when you are wrong?
Oh, that's a good one. But if the price goes up, so you have to buy it at the higher price to return the shares. If you go back to the guy and say, hey, your share, I got your shares, but it's going higher. The guy say, I don't care. You have to give me 100 shares of Tesla. You borrowed 100 shares of Tesla from me. So your loss is to go higher, $250, buy it, and then return the money back to the shares to the guy.
So your loss is unexpected. You don't determined by the market. If the Tesla goes up 100% in one day, you are fucked.
Yes. Do you know what happened like this? Do you remember GameStop?
Yes.
Do you remember GameStop in 2020? That's exactly what happened. A lot of people were short, and then GameStop started going up 1,000% in one day. 1,000%. So they got just destroyed because the price went up, and they have to buy that. So when you're shorting, your loss is unlimited.
But how if you have only $1,000 trading and like you are shorting a stock for like 500 whatever shares,
Yeah.
how so then how will get more money from your account if you don't have insight?
As long as the broker automatically calculate, as long as your loss gets equal to what you have, they automatically close your account and take your money. So they control it for you, the brokers.
Interesting. So they are going to take all your money that you have in your account, and after
And they go
1,000,
by
they stop the trading, right?
for you, yeah, because you lost it.
So so it's better to have limited amount of money in your bank when you are shorting.
Yeah, you got to be careful on that. Yeah.
Do you have any good stories to tell us about shorting
Uh,
stuff?
I never got really. Yeah, I had that one company that was really bad. The company was CarMax. It was a car rental company. It was going up, and I shorted that. It was just keeps going up, keep going up, and eventually I had to accept a $200,000 loss.
Eventually, after in span of how many hours or days you had to accept?
It was 2 hours.
2 hours.
$200,000. Yeah, it happens. It happens in trading.
And so you don't advise people when they start out to start shorting stuff and doing like
No, I advise people to trade in a simulator first. So there are simulators that you can trade exactly like us, but with fake money. And you practice and learn the process, and then you do that. But definitely shorting is very dangerous.
so the longing thing, it's actually not a term as I understand. Longing is just you regularly buying a stock, right?
Yeah, but sometimes they call it long or buy. Yeah, it's the same.
Interesting. So, what are your opinions about all the other crypto stuff, all the other asset? I don't know. There is NFTs and all these hot industries.
I think NFT is a scam. I think crypto is good. It's possible, but crypto is very difficult. Just 1 second. Can you give me 1 second?
Yes, no problem.
Ryan, how are you? Yes, sorry about that.
You. What was the yes? You happy
That was a good news I got from someone.
about?
It was about the business thing.
Good. You made money or not about money?
Yeah, I made money.
Good. We are happy to see your reaction live.
Good. Hey,
So you were saying that NFTs are scam.
NFTs are a scam. Don't touch it. They have no value. No value. And I never understood why people are paying money for a JPEG file on the internet. Why are you doing that? But crypto is good. Crypto potentially can be an asset. But what happened with FTX and a lot of these exchanges who went down, and people are going to be very careful not to put all of their money in crypto. People should put some of their money in the crypto, maybe like 5% of their savings in crypto, and the rest has to be diversified in other things because crypto is very volatile.
So don't put only a small percentage of your money in crypto. Like,
Yeah.
do you have a percentage?
I don't think it should be more than 5%.
More than 5%. Okay. You personally have more 5% on crypto?
I never invested in crypto. I don't have a crypto wallet, and I really don't believe in crypto as something that makes people rich. I'm investing only in the stock market because these are real companies producing things. Apple produces the iPhone, Tesla, there's a car for it, social media companies, there are apps that you're using. But what is crypto for? Payment? Yes, but credit cards are also payments. Like,
Okay, so you don't believe anything else. Your god is the stock market,
yes,
the American stock market.
yes.
So if you were going to, what my experience with the stock market is, I find whenever everything is low, I go and invest my money. So do you think, and I just leave it there for a long period of time. Do you see some other strategies, or you don't even think about this stuff? You only think about day trading. You don't think about long-term stuff.
Only day trading. I think about only day trading. A lot of people think, oh, Tesla is going down, maybe you should buy. No, it's going down for a reason. There is a reason for it that it's going down. You don't want to try to catch a falling knife. Very important for people to understand that when the knife is falling, you don't want to catch it because you can hurt yourself. I only look at the day trading. And if it goes wrong against me, I get out of it. At the end of the day, I'm all cash. If Monday, today's Friday, if Monday something happens and the stock market goes down, I don't care. I'm all cash.
Because what do you mean you are all cash? Because the day trade, you are getting out of the trade in 10 minutes, you are saying.
Yes. And at the end of the day, your money is cash. Like you have $10,000, buy, sell, and then at the end of the day, $10,000, whatever.
Okay, very interesting. I want to touch a bit more on that, but how do you deal with fees and all this stuff?
So there are commissions for that. So they charge you half a cent per share. So if, like, for example, if you buy 10 shares, that would be 50 cents commission. 100 shares would be $5 commission.
Which is nothing.
Nothing.
And what are you using? What store?
I use a company called Interactive Brokers.
Yeah.
They are broker company.
I saw a lot of them advertising. So
Yeah, they're the best.
They're the best for this stuff that you're doing.
For this.
For day trading or for generally?
For day trading. For day trading.
And you have other friends that they do the same thing, and you do masterminds, and you see, and you're saying, oh, I'm at this, or this is going to this direction.
Yeah.
Can you explain me some of the conversations that you guys are having?
So what conversation that we're having? So we come in the morning and we say, okay, guys, what do you think about? I'm looking at Tesla. Another people say, hey, I heard that NVIDIA is also going up. So they give us tip each other. And then we go look at the tip. Oh, NVIDIA is going up. Oh, this one's up. So we continuously looking for, trading opportunities. So a lot of conversations that we are having, people are having opinion. And someone say, hey, this pattern is forming. Do you want to trade it? And I look at it, it's good. Or someone says, hey, this bull flag is forming. Do you want to trade it? And I say, I don't like it because of this and this and this. So we all share a lot of knowledge together. Or sometimes I have a question. Hey, guys, I have a problem with this platform. It doesn't show that. How can I fix it? And a lot of people in this online chat room, a lot of answer the questions. Oh, I have the same issue. I did this. I fixed it. So it's very important to be around other traders.
And do you do that I see you are in some offices and I see other people around, like, do you do that in the office that I'm seeing now with other people?
Yeah. So we have both in person and also we have online that, through the screen sharing and online chat, we have that.
Interesting. And so is mostly shared knowledge of everyone. This is what I think, this is what I think, this is what I did, this is what the lesson I learned the previous time, and like you guys are like making a brainstorming and you are attacking for the day.
Yeah.
So
exactly.
You see your war, you waking up and like you are ready to go to war in a way.
Exactly. Yeah. Getting ready to go to the war. There is a war. It's a very small war. It's online war. Because you trade next to other people. Like if I lose money, you take my money. If you lose money, I might take your money.
So it's like this, you think? That there is basically you need to be better than the competition?
Exactly.
Can you elaborate on that?
So market is a whole number of other traders. Some of them are algorithms, some of them other people. So essentially you trade against the market. So you have to be better than other market participants. So if you're smarter and you're identifying a pattern before everybody else and jump into that before everybody else, you make money.
And there is thousands of people, probably, I don't know, maybe millions of people trying to identify the same patterns that you are.
Yes, that
And
is
what
correct.
sets apart? Like, is it like you have a better understanding of patterns? You have, you are faster than the others. You have a higher, like, what sets people apart in this stuff?
I think what makes people different is people look at the chart patterns differently. For example, I look at the chart patterns on 1 minute. Another trader look at it on a 5 minute time frame. And we both have, sometimes it happens a lot in our office, two traders trade one thing but in completely different opposite side. Like I short Tesla, he buys Tesla. At the end of the day, we both profitable because we are looking at a different pattern. Like for example, I shorted, quickly drop, I take my profit, and then he still holds it because Tesla bounced back in a different time frame, constantly in these moves. So there are millions of traders, and everyone has their own strategy, and all of them can be correct. Depending on how that person is trading that strategy that developed for themselves.
Not all of them can be correct, right? Because
no, not all of them, but it's possible. It's possible. Yeah.
But I don't understand why someone is losing money and someone is winning money at his expense.
Yeah, but because it's not always. Like I might lose in one trade, and the next trade I might make money. It's not that every time that you make money, the same person is losing it to you. Like, it's a collective environment. You can't really say who's losing to you. You cannot. It's the market as a whole.
The market as a whole, but affected by all the players. The players, yeah. So, but sometimes maybe the players doesn't affect the market, or always the players affect the market because the stocks are speculate. Because sometimes, like I don't know, like a lot of ChatGPT, a lot of innovation can happen that can drive the market up, or you think all of the times. This is like a bit more fundamental question about the stock market. How does it work?
It's the collective environment of the people. You don't know. Like for example, let me see, internet. Let me see an example that they say that you're not dealing with 1%, but it's the whole environment that you're trading with. Like it's like a lot of people say, hey, if I lost money, who took my money? Who is it? I want to find that person. That you can't find that person. It's the market as a whole that you lose money to.
So your money that you lost $100 is divided by any split to everyone that won money?
Maybe, I don't know. I mean, no, you cannot say it that way. The price is different. Like, let me see, for example, like NFT, for example. Like you buy an NFT and then you sell it at a loss. You don't know who's... Hold on, look at it this way. Like, for example, you buy Bitcoin at $30,000 and then the price of the Bitcoin has come down to $20,000. Where did that $10,000 go? Who did it take it? It's just, you cannot say who. You can't say who took that $10,000. It's the market, the price came down.
But someone took that?
No, it's the market. It's the price of the market. No, there is no one person that takes that.
But, so basically, I think you pointed out, I'm trying to understand a bit more fundamental about the stock market. So you pointed out the NFTs, and you said the NFTs is based on speculations of people, like how much they think this NFT worth and how much there is demand. And similar way isn't how the stock market works. It's pure.
Yeah, it is. Pure speculation. Yeah, absolutely. It's pure speculation.
But you are saying the difference with the stock market is that if the NFT can go like if it lose the value, it can go to zero. But a company, because they have asset, they have all this stuff, they are making money, they have balance sheet and all this stuff with the money, they cannot go to zero. They will have someone to buy them or some, so it doesn't go to zero. So it has this thing that the market determines the price, but also it has insight that the price is embedded on how much actually the company worth. But which one is more?
The price of the fundamentals of the company, balance sheet and everything eventually determines the value. Like market has some impact, but eventually the balance sheet of the company and what it does, it makes an impact. Like Tesla is going down now, but eventually it stops because Tesla as a company has a balance sheet, has a cash and everything. So there is eventually a place that this fundamentals of the company impacts. That's why my problem is with Bitcoin. Bitcoin is all a speculation. There is no fundamentals behind it. Bitcoin can go to zero. Dogecoin can go to zero because there is no balance sheet behind it. You know, one day everybody wants to use Bitcoin. One day everybody says, I don't want to use Bitcoin. But Tesla is different. Tesla cannot go to zero because this company is producing cash, has the company's factories and everything.
And that's why when you are shorting, then you are not going to lose so much. When you're short, you can lose because it goes up. But that's why you 100% prefer the stock market than anything else. And that there is no question about it. That's why there is this loophole. But I'm curious to hear, so you are trading based on market speculation about stocks or based on the balance sheet of...
Only a speculation, no balance sheet. We don't look at the balance sheet. We look only at the speculation. It's called, what you said, it's called technical analysis and fundamental analysis. So fundamental analysis is about the balance sheet and cash and work and revenue. Technical analysis is all about chart patterns and speculation. I only trade based on technical analysis.
Okay, so give me some advice. I want to start from tomorrow. Should I start? I will get a simulator. I will read your book. What else I should start doing?
I think you should read the book. You should get a simulator and try to watch some traders who trade live and learn from them for 1 or 2 weeks to learn exactly their thought process. Like, for example, if you want to learn how to play chess, it's good to go and look at the people who are playing the chess and ask them, why did you play that, and the thought process behind it. So read the book. There are free simulators. Don't pay for it. Go to tradingterminal.com, has a free simulator. Go trade for real time for free. And watch some other people on YouTube or other places and then learn it. And then if you like it, you can open up an account with Robinhood or Interactive Brokers or Webull. There are so many brokers. And then start a small share size, small. Don't go too big. And then when you get to the consistency, slowly increase your share size.
The consistency, you mean of getting 0.5 return 1% return a day. And what's the most return that you got in a day?
Percentage wise, 20%.
And what's the longest that you lost?
I think the loss was also about my account was $2 million. I lost $120,000 in one day. So it's about how much would that be? 5% of my account in one day.
So, okay. Wow. Interesting. Okay. I understand. Can you explain me a bit of the educating people about this stuff? About your YouTube channel? Do you put a lot of effort in your YouTube channel? Do you put a lot, like how does the education part works?
So education part is we have some courses that show people how the strategies work. So these are the videos that people can watch. Is about 10 to 15 hours, and then every morning we actually live stream our trading to people. Like in real time, you can see my screen, you can see my trades, entries, and exit, and losses, and laughs and cries, and everything. So our website is some basic fundamental education that you read, plus the real-time trade that we do. And then we have weekly webinars that we go through the questions that people have, answer them, and everything. In our YouTube channel, I post my daily trades, daily recaps, that people can see how I traded, what was my losses, and what was my gains.
So you basically film the content when you are live, and then you're just uploading to the YouTube channel.
YouTube, yeah. Yeah.
So how about other people? You are trading live. How about other people doing the same thing like you are doing?
Yeah, some people do that, but I don't recommend doing that. I think it's very dangerous if you follow someone else. It's very, very dangerous if you follow someone because, sometimes, might be late. Like I'm saying, okay, I'm buying Tesla. By the time that I say that, then it comes through platform and you see that, then you want to follow that, you might not get exactly the same price that I got. So we do not recommend mirror trading. It's called mirror trading.
And so people pay to watch you live streaming and okay.
Yes.
Can you share the prices of the stuff that you have out of curiosity?
It's $99 per month.
You, and also to the courses or different the courses?
No, courses are the same, yeah.
Okay,
included.
$99 per month. And can you, so you have the book kind of funneling people to this. You have also the YouTube videos funneling people to this. And where do you see more conversions? Because I'm a YouTuber, I do entertainment, but I don't have good conversion rates. But
I think YouTube is the best. Like YouTube, I think that from YouTube people find me, and if they want to learn, they can check our website or read my books. I think the funnel is coming from YouTube. I mean, you're a YouTuber too, but what do you want to converse? You have to ask yourself, as you are an entertainer, what is your funnel? Like, why someone has to pay for you? What is your product? My product is how to trade.
Yes, when I tried to do merch, it didn't work that well. I had like 2 million subscribers and I already sold like 10 t-shirts. So this is what I mean. I don't convert well.
I don't know. I mean, merch and I don't know, to be honest. A t-shirt is a hard business. How does Mr. Vista do that? All of these brand and followers.
Yeah, that's a good question. But he's doing it on a far bigger scale. Like probably he can make $1 million just by promoting the merch, or $500,000 in one of his videos when he has new merch, probably.
I don't know. Well, Phidias, it's 4 p.m. I gotta go. I'm sorry that I was also late, but that was a great discussion. When you edit it and publish it, let me know so I can share it to my community.
I will ask you 2 last questions, okay? Good.
Okay.
So we have these questions for every guest that we have. So I give you $1 trillion. How do you spend it to have maximum impact in the world? Positive.
$1 trillion to the maximum impact. I invest in clean water technologies because I think water is one of the biggest challenges that we have in the world. I try to give that $1 trillion to companies that are producing fresh water because there are so many countries that are struggling with having fresh water.
Okay.
Drinking water.
And you are going to die after this podcast, okay? this is your last 30 seconds that you have to broadcast to the world. If you actually die at some point in the future, in 5 to 10 years, we can come back to this moment and see what you had to say to broadcast to the world. So, are you down to do the exercise?
Yes.
Okay.
So at last 30 seconds of my life, should I say something?
Yes, you have to broadcast to the world something. This is you are going to die in 30
30
seconds.
seconds. Okay, so I think I'm very grateful for the life that I had, and I think life is very, very short. You have to enjoy every single moment of it. Like, even if it's really bad, you don't have money, you're sick, or you want to do something that you can't, still having life is very amazing. Now that I'm going to lose it, I miss the air, I miss the rain, I miss the pain, I miss the crying, and I wish that I was enjoying my life more instead of just being annoyed all the time.
Thank you. I love you. I love how chill and relaxed you are as a person. So